Stablecoin issuer Figure Technology making its public debut right here at the NASDAQ today. The company increasing the size of its offering to more than 31 million shares, up from 26 million. The IPO priced at $25 a share, above the expected range. Joining us right now, first on CNBC, Figure's co-founder and executive chairman, Mike Cagney. Good morning to you. Congratulations.
Thank you. Thanks for having me here.
A heck of a morning for you. So tell us about what you're going to do with all this money and how we should think about Figure in the context of this stablecoin revolution.
Yeah, so Figure is a blockchain company, and we're using blockchain to change how capital markets work. And blockchain has this one very interesting superpower in that it allows you to displace trust with truth. And so if you think about all the markets that we operate in, the NASDAQ, for example, there isn't a truth in those markets, so there's lots of intermediation. So when we trade stock, there's 7 parties that sit in between a buyer and seller. When we swipe our debit card, there's 5 parties that sit in between a buyer and seller. And blockchain's ability and sort of that superpower of trust over truth allows you to bring these down to bilateral transactions just between buyer and seller. And the parties you're disintermediating that sit in between of these transactions represent trillions of dollars in market capitalization. So we see blockchain as a technology that's actually going to be a catalyst for the movement or migration and creation of trillions of dollars in market capitalization.
So how should we think about what you do, for example, versus obviously what Circle does, which obviously they came out of the gate hot, and a lot of folks have invested in that business in part because there haven't been a lot of other publicly traded versions of this?
Well, I think the way we look at it is just like there's a Mag 7 of Web 2.0. You're going to have something like that for Web 3.0. The technology is so big, it's so pervasive, and it's really going to change the world. And we think we're one of those companies. We started with home equity line of credit with actual loans on blockchain. So we started originating loans on chain in 2018. We've done over $16 billion of origination. We've done over $55 billion of on-chain transactions. And the average consumer doesn't see blockchain when they get a Figure loan. What they're getting is a faster process, a cheaper rate, because of all the efficiencies blockchain affords us on the back end.
In terms of the growth trajectory of this company and the profit trajectory of this country, speak to it.
Sure. So we were GAAP profitable last year. We were actually contemplating going public last year, and for a whole host of reasons, we didn't do it. It wasn't the most hospitable environment for a blockchain company to go public last year. That's changed a lot in terms of both the SEC and the market appetite for it. Last year we did $340 million of revenue. We were over $100 million in EBITDA. EBITDA growth for the first 2 quarters of this year is over 66% on an annualized basis. The company is still growing very rapidly. So it's a unique intersection of a relatively young company, a very profitable company, and a very fast-growing company.
Had you thought about selling as opposed to going public?
No, I think going public is a step in a process. It's not the end game for us. So we're very happy to be having this opportunity today to celebrate all the work of the team and celebrate the market cap. But we see Figure as a massive opportunity in terms of what it can do.
Is there a consolidation play here? Because there's a whole bunch of folks who are in the stablecoin business, but everybody's doing sort of different things in this sort of stablecoin space.
Yeah, the blockchain and crypto space in general is massively subscale. So there's a lot of opportunity for consolidation and roll-up. I think that's one of the things being public affords us. But that's not the primary reason why we're going public. It's really around being able to tell the narrative, but also, I have the experience of, I raised $1 billion in my last company from SoftBank. It was the largest private raise anyone's ever done. That balance sheet capital transformed that business, and I see a corollary here with Figure as well.
What besides mortgage? You could do anything with this, couldn't you?
You do anything.
What's next?
So we'll continue to go into credit, but one of the things that I'd like to do as a fast follow is actually do a second QSIP for a blockchain native public equity of Figure. So not a DTCC security, not trading on the NASDAQ, actually trading on a decentralized exchange. And the benefit of that, there's sort of three reasons why you use blockchain. You get transactional efficiency, you get liquidity, but really the biggest benefit is decentralized finance, connecting sources and uses of capital directly. So imagine a world where I can self-custody that stock and control the stock loan. So I don't go through the prime broker anymore. I decide when I want to lend that stock out. When it goes on special, I get the full economics of it. It doesn't get skimmed by the prime. It's a much more efficient structure when you disintermediate.
Are there more shorts than longs?
Well, there can't be, right? Because you have to have the stock.
I don't mean that. I mean in businesses that exist today that aren't going to exist anymore because there's
100%. So I think this technology is single-handedly going to cause more disruption than any technology ever has before.
Any technology ever will have. We're not allowed. We got to get short now.
Well, and I think with the stablecoin legislation, the Treasury is talking about trillions of dollars moving into stablecoin, but they're not talking about where that money is coming from, and it's coming from bank liabilities. And so you have an entirely new paradigm in banking where they're going to start losing those liabilities on their balance sheet. That changes their model profoundly.
By the way, I know we got to run, but to that actual point, we've had a bunch of people come in here and say, actually, there's going to be a big buyer for treasuries, and so we shouldn't worry about whether the treasury market is stable or not, or whether foreign buyers are going to buy treasuries anymore, because at least temporarily there's going to be this influx of stablecoin companies that are going to buy the treasuries to back what they're doing. But the truth is, I think, and maybe I'm wrong, that may all be, but a lot of the money ultimately is going to come from the banks.
Well, remember, if
so it's all just a circle.
Yeah, and they're talking about $2 trillion, or they did a study out that said $6.6 trillion might go in. At the end of 22, when the Fed started to tighten, we went from $18 trillion to $17 trillion in bank liabilities. We had $1 trillion of outflow of deposits. Capital markets completely shut down. Banks began to hemorrhage out assets. Silicon Valley Bank failed. First Republic failed. The FDIC had to come in with extraordinary measures on insurance, the Treasury for liquidity. That was $1 trillion of outflow. So if $2 trillion or $6 trillion leaves, that's a massive void that's created in terms of financing private credit. I think blockchain can step into that void. It's a longer discussion, but that's something that we have to address.